If you are in the crypto realm right now looking at these price action through all of these assets, you are about to see a huge change in the price action. You are about to watch a great opportunity. You are literally watching something which is evolving in price action, showing you can make wealth out of this. Now, when you actually look at the price dropping, you may ask like, okay, what the hell is this guy talking about? The price is actually going lower, right? And that's the point. If you've been following me, you already understand the fact that while we were here, we told, okay, the market is about to drop. We dropped. Then we talked about the possibility of how this pattern may evolve, and that way we understood there is a pattern like this playing out. We just got this break to the downside, right? Now, that's Bitcoin. While Bitcoin drops to the downside, if XRP is also following the suit, breaking this pattern, that means another 4% to the downside. So the measured move is taking you all the way back down to $0.43. What does that mean on the macro picture? Are you actually breaking majority of the supports? No, literally not. Because on the macro perspective, you're still holding on to this channel or the trend line, which is valid, which is okay. You still hold on to this trend line even if you drop to 0.4. So dropping towards 0.43 or 0.4 is not a big deal for the price action. But if you are a buyer in the market, it gives you more opportunity to buy at a lower cost. Now, yes, the market, it doesn't actually look good with all these politics we are watching around the globe. Stock markets are dropping and the panic is not entered here yet. It's just a little bit of fear which we are observing, and the level of panic is about to pan over here. Majority still believe that the stock market is about to go higher. They really don't think the stock markets are going to drop. But look at the volatility index. It kind of shows you some story. It kind of gives you a narrative of something is breaking. That should give you an edge in the market. You're going to observe the market taking off in next few weeks. But before that, you will see the market taking on panic. From the current fear, we will go on to see panic for sure. Look at this. The daily close in Bitcoin just gave you a confirmation that we are breaking to the downside. Last couple of weeks, we've discussed the possibility of this range playing out. These are simple moves in the market to understand, okay, we are trending lower. Each time you break down, you come back to retest that range and get rejected. Welcome to the Scientific Investor family, where the normal retail guys get to learn how to become the next top 10% of this world. Yesterday, for XRP, we talked about the possibility of a candle going red, getting rejected like this. Right now in the market, we have that happening. Now, fundamentally speaking, this is one of the assets taking over the world, except for the US. Agreed. But you actually can see this. When one of the assets is going up, you get this guy saying, now remember, back in the day, when the price was low, maybe 180 or something, this guy was literally saying, sell it. Now, when the price just shot up, he's saying, okay, own it. So you get the perspective. Instead of giving you the thought process, okay, I think this may actually drop. And if it actually drops, this is the measured move. At the bottom, he says, sell it. And at the top, he says, buy it. So you kind of get that's where the market is going. So while you look at the price action, yes, short term, it's going to be a pain. But if you had the patience, if you had the level of discipline, which you need in the markets to make money, now you're literally waiting with the dry powder to buy assets, not Bitcoin for sure, to buy assets, altcoins, when they are undervalued. Anyway, close to 24 towards 22,000. I would say it's massively undervalued because Bitcoin moving that low will pull all these altcoins to the downside, making them even more cheaper. Because yes, on the short-term horizon, we are seeing divergence in the Bitcoin dominance, slowing down, coming back down. But we go back on a weekly chart, right? And the weekly chart give us a story saying, okay, this range has been acting as a resistance for some time, and right now we are above that level. So if we actually use the traditional technical analysis, we can say, okay, this one candle that moved to the upside is still valid, because after that, it's the fourth candle now trying to erase the one. So that equation is balanced, because if you understand how the market works, last time when we saw this, like one candle took 3 candles to even come back down to that level, boom, it popped, right? So that is still a possibility which I see in the market. That means Bitcoin dominance may go up, meaning panic may still enter the market. Some of these assets we haven't actually seen a level of panic which can actually enter into the market. Say for altcoins, we usually use Ether. And right now, if you're actually looking at Ether, you can actually put on the argument, okay, Bitcoin broke to the downside, but this one did not. So most likely as Bitcoin drops further, this is going to actually drop towards 1700. That's just the pattern side of it. And if it actually breaks that range, now we are looking for 1500. That's not a small move considering you topped out close to 2100. Now you actually take that perspective and you want to actually see how low XRP is going to go, where XRP is right now. On a macro chart, on a micro chart, having this ability will give you a little bit perspective. Say, let me actually put it this way. You look at the daily chart of XRP and right now there is something like this evolving. Now, can we actually get an inverse head and shoulder? I'm not sure about that, but if the market shows you that as a possibility, I would say don't neglect that. Keep that as a probability, maybe 10%. Keep it aside. And if that happens, you make money, right? You get a reversal from that point onwards. Because right now, the market actually gives you a clear perspective saying, I respect this trend line, or at least the market participants buy this asset when the price is coming to that point. Last time, when we reached that point, the same herd thought, okay, that's it. It's the top. We're selling that top. Right now, it's acting as a support. So here we go, you go on a macro chart and you're looking at the RSI saying, we're still trending to the upside. We haven't yet did that bearish move to the downside. We are holding on to this trend line support, which is actually fine, which is actually great. Historically speaking, while you look at the engulfing candle here, it is really interesting to see how this week evolves. Because with this weekly candle closing, keep this in mind. If that close at least about 50% or more bullishness, keeping that here in this last candle, that's going to be a monster. Why? Say this particular candle, when it actually went up, it did around 8%, right? So if it actually managed to hold above 4%, which is going to be 0.44, that is a massively bullish sign, I would say. So consider it like this. Even if the price actually drop and come here to 0.43 and the weekly close is there, now it kind of goes to the pattern which we talked recently. Okay, one candle and another 2 or 3 candle try to reach back to the bottom. Then what happens? Eventually you get a burst off. Boom, you go to the upside. That's the narrative on the weekly. Then you go on a monthly and you're looking at this like, okay, we are correcting down. There is no question about that. But what we just talked about on a daily, on a weekly, you are watching exact same thing on the monthly. You got one candle which went up like this and 3 candle coming back down to meet the exact same point and you burst off. Meaning sellers were becoming weak and weak and weak. You need a 3 month to erase or backtest just 1 month of bullishness. Right now, you're watching something similar. So if we actually get another candle which is more bullish, it would be great. It would be fine because all that's happening in the market is showing you we are testing the support range. And if you are in the market, what you are literally doing is buying at the support. Yes, for 100%, you are literally watching all these stocks getting collapsed, except for some assets like, the Nvidia. While you look at the market in Nvidia, you may actually think like, should I buy it right now? Go on to the macro perspective and ask the same question to yourself. If you are an investor in the market and you're looking at this asset for a macro perspective, say you're using a monthly chart, you're looking at this, what do you really see? Let me ask this clearly. What do you really see? For me, maybe I'm wrong. This is what I'm observing. We put in a higher high in the RSI, and the price to RSI shows you a divergence. The price actually went up, higher high, but the RSI dropped. So I'm like, okay, there is something which is not matching up there. So I really would like to follow this closely, go on to a weekly chart. We don't have a bearish divergence yet, which is a positive news, but the RSI shows you the momentum is reducing. So the level of risk is increasing. Now I go on to a daily chart, and that's where it gets interesting for me. Meaning you haven't actually made a higher high in the RSI, but the price is going up, 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 up. So the AI, the concept, the investors, the speculation right now is so hot that you may actually feel like, okay, let me jump in. I don't really want to miss this out. Because if you're actually slowing down on the macro and reaching this level to get rejected, that is going to be painful. And not just that, look at this. How bad can it actually get? You'll have to wait and see. Because on the other end, yes, not a lot of people agree, but we have actually understood the fact that when dollar goes up, the market goes down, because the market is priced in dollar. It makes common sense, right? It's common sense. So while we actually look at that, dollar is still showing you, I'm having a divergence, but I haven't yet reached that level of resistance. So if you actually extend this line, you can put the argument like, okay, dollar can still go up. Even if it actually reaches like 104, I'm fine with that. The RSI is showing you a different story. The RSI suggests, okay, I'm reaching a resistance, I'm slowing down, or else I'm having a hard time pushing back to that level. That's easy. Now that means at one point, close enough to 1.104 to 105, we are going to actually get a rejection, most likely in between that. 104.5 can be a macro resistance there, which is going to be adding on some bullishness. Now gold is dropping, Bitcoin is dropping, you are watching opportunities everywhere in the market. Now you can literally scale back onto a macro chart like this, take all the indicators away and ask yourself, like last couple of times when you got these indicators, what happened in the market? You got this and the price dropped. Why? Because at the same time, the strength in the market reduced. You got next step here, the market dropped after that. So literally, this stuff kind of gives you an advantage over the market if you understand where you are looking for, what you are looking for, right? Because when you actually step back on the weekly, this is the same exact pattern in the price action, which showed us we are bottoming out. And go back to that time in YouTube, November to December, a lot of people were calling for $10,000 to $12,000 Bitcoin, while we were saying, no, I think we are going to bounce back from here. This is a falling wedge. One, we have a divergence here. Two, we were giving you all the reasons why this can go up. Because we got a break of this pattern. We've been waiting for this pattern to break for a long period of time. And when that's breaking, you don't go against it, right? So if you shorted the market at 16,000, good luck for you. And if you're longing the market at this point here, thinking the price is actually going to 35,000, it's true. The direction is correct. It's going to go there. But do you really have that level of liquidity? If you are heavily leveraged around 10, 50, 100x, a lot of people actually does that in the market. Now, to put that amount of stop loss, to extend the market, it's going to be a pain in somewhere. So think about this. If you went in low leverage, now even maybe $100, $500 will actually push your stop loss a little bit, give you some room. But if you went in 10x, no, that's not the case. But now if you are adding on to the asset, thinking like, okay, we are reaching somewhere close to the 200-day moving average on a weekly chart. This is what we actually did that here, right? We averaged down on a lot of altcoins which we were trading 100%, adding on to 100% more unit because we reached this range. And that kind of showed you like, okay, that was the previous resistance turning into a current support. So we need to see how the price action behaves there. Now, if it actually gets a huge panic fear motion moving to the downside, you get another opportunity to add this on, because right now you don't know if something happens in the banking sector. Everyone comes onto the crypto space. This takes off from here. Because for them, they don't actually care. What they care is to have money with them, which they can control, instead of the bank saying, okay, you can only take $500. You can only take $100 a day out. Right? This is happening around the globe right now. So while we actually look at all these and look for assets, understand this is one of the strongest assets out there in the market. Now, why am I saying this? Because you need to understand what we observe in the monthly goes on and on and on. So we go on weekly, a shorter time horizon, to understand whether that's valid. And here we see, okay, that's valid, great. Now we actually further drop back into the market. It's like one candle went up, you're literally working on the third candle, you may come back down to this level, that still is great. Which actually shows you the same thing. You had one candle which moved in one direction and other three candles were not able to push this above this level. So they were weak. Same, one candle dropping here, 4-5 candles needed to go back, test that range, you get rejected. So the same exact opposite may play out here. You just have to position yourself in a way that benefits you. If the market decides to move like that, coming towards 0.42, 0.4, it's an opportunity, right? If it's me, I would consider that as an opportunity. I really don't know how you people think, but I believe all of you are intelligent enough to understand the factor that this asset is one of the strongest assets with this level of utility and fundamentals and the level of network adoption. This is going to pan out in next couple of years for sure. But before that happens the speculative side of things. Before that happens the psychology in the market. The macro divergence we talked about in the last video, the detail about how high we may actually go on the wave 2. Literally, that's a big possibility, because when you actually look at wave 2 and say that, now the question is like, what do you really think about the market cycle perspective? I'm not saying we're going to repeat something like this. Maybe it's going to be bigger than that. Maybe it's going to be smaller than that. It's all okay. But what you have to keep in your mind is that this was just the wave 1 structure. In crypto, we have seen an average of 5 times wave 1 in wave 2. So if you actually take that into perspective, you are looking for something closer towards $20, $22 in wave 2 itself, not just $18. I've been trying to be conservative, keep the limits, have proper exit strategies, but this should also be considered. What if it's not $18? If it goes to $21? A lot of people, if you are going out completely, buy $10, $12, now you don't have units left in the market to take out when it actually goes to $20. So you have to actually have an exit strategy where if it ends at $15, you still have a big chunk of profits out. If it continues higher, you still have assets in the market to take the profit out. So make sure you have a great plan which considers almost all this thing. Now, the market and the probability here is literally like a curve. Like you actually put in like a normal distribution where you'll say, okay, this may have the maximum possibility, but this can also happen, right? Even though that's a small, teeny, tiny bit at the end, the markets sometimes work weirdly, right? So people would say, nah, this asset is never going to that direction in this pump, and that's being pushed out here as a probability, and the market does that. Imagine how many people in the market would have thought that this would be possible, a 700x run up in XRP just in a year. How many people would have thought like, okay, that's even possible, right? So that is one of the reasons why I say, right now you think this is the possibility, but the market sometimes does some weird stuff which kind of surprises a lot of people. So you're literally looking at all these different probabilities saying, okay, maybe it's at $8 based on these pattern, these wave counts, these structure. And now you're like, okay, I look at all this. I have this amount of units left. I'm going to take this amount at these price ranges. You have a strategy. Because if you fail to plan, now you're literally planning to fail. That's for sure. So if you actually received value from the video, please do hit that like button for me. And if you haven't subscribed to the channel yet, please do consider subscribing. I'll meet you guys on the next video. Bye for now.